Hi, this is Optimus Futures, and we're back with our weekly roundup of key commodity and futures markets for our viewers. As we always say, please let us know in the comment section below if you've got any questions relating to the analysis that we post here, or if you've got any comments relating to how we can better these sessions for you. As usual, we'll be looking at 5 key markets here, including the light crude oil futures, the S&P 500 E-mini futures market, the euro currency futures market, gold futures, and the 10-year Treasury Note futures market. We'll start our analysis with the light crude oil futures, and we start with the daily time frame simply because this has been one of the time frames that displays the recent price action on this market the most effectively. So we have a very long-term resistance level here that I've just drawn, and we've been looking at this level for a while now on this market, and for obvious reasons. So essentially what we have here is price breaking past this level, closing strongly above, but then failing to build on any momentum because price was able to pull back to the level, hold its support, although not cleanly. We saw a couple of daily candlesticks creating the spike to the downside, although we didn't really see a very strong close below this level in the past, and price was able to bounce off. This is kind of where we closed the week prior to the last one, and we did indicate in our last week's video when we were analyzing this market that a lot will really depend on whether this former long-term resistance level is going to continue holding as support and allow price and the bulls to really build momentum to the upside. We failed to see that this week because as you can see, we had a strong bearish close on the daily candlesticks at the level, almost at the level, and the next one we just popped straight through, closed strongly to the downside. We did sort of bounce off of this area, which isn't really a long-term area. A more longer-term area would have been probably this level around here. We did not quite make it down to this level like we did in the past over here. We kind of just bounced off of a shorter term level, but that's essentially where we bounced off and kind of just pulled back to the level right around here, which is the level just underneath the 5,800 round number. Once again, we do not have a very strong close on the daily. Importantly, we haven't been able to close above this level, and that really could be a sign of weakening bullish momentum here if we do not push quickly past above this level when the market opens on Monday. If we continue to just kind of consolidate around this level like we've been doing, we could really even be building up into some kind of a wedgish kind of a pattern here and eventually break to the downside in the more longer term. But that kind of remains to be seen. Again, a lot will obviously depend on how the market sort of unfolds when the market opens on Monday, and obviously how it develops through the week. But this is a level that we're now watching very, very carefully for any signs of some real damage to the long-term momentum that was set up pretty nicely here, leading up to this long-term resistance level. And this is kind of expected when price is really making it past or trying to make it past extremely long-term highs around here and resistance levels as strong as these. We do get these holdups around here as price tries to consolidate and decide for the long term where it needs to be headed. So yeah, we really do not have a bias on this market as of now. Just looking at the price action here, a lot of it is just indecisiveness and uncertainty as to what price is trying to do here. Unless we see a definitive move away from this long-term resistance level, we're really not very interested in indicating or in looking forward to a long-term bias for this market. Okay, so the next market we're going to be looking at is the S&P 500 E-mini futures market. Last week we discussed about how this market was able to build on some good bullish momentum until Friday, when we had an American political news event kind of creating a spike in the market and some fireworks close to the end of the week. This week we sort of opened with a gap to the upside. You can see that the market sort of opened a few ticks above where it basically last traded the week prior, and straight away we had a bullish candle closing strongly, and then straight away lose momentum and the market pulls back to fill in the gap. For new traders watching this, you need to know that the market tends to fill these weekly open gaps sooner than later, and that's one example of that phenomena kind of unfolding. The market really didn't amount, even though we had a very strong bullish momentum here going into the start of the week. We obviously saw the selling that came into the market on Friday kind of get overtaken almost entirely on the same day, and if anything that was left was kind of just eaten up when the market opened this week. Obviously we spiked up and we continued to move higher for a little bit, which shows that the bullish momentum on this market is strong as always. But once again, the market had to pull back to fill in the gap, which we see is a very repetitive phenomena in the world of financial markets. So you can see that gap kind of being filled over by this candlestick over here. We open and straight away the market pushes down, closes strongly. We do see the market kind of pull back after that a couple of times to this level, the lower end of the gap sort of, and just continue on for a bit, which is likely just the market trying to reach lower levels to attract some fresh buying into the market. We wouldn't really be surprised to see price kind of even trickle down all the way down to this low here, and maybe get in some fresh buying to come in off of these highs over the past in here. But we didn't kind of see that. We actually just bounced right off of this short-term level. We have evidence of some minor support here. You can see we did kind of have the market sort of turn around at this point on Friday as well, and straight away that's precisely where the market sort of rebounded and regained and restored the bullish momentum and the upward movement that this market has been so accustomed to for the past many months. This next week we expect price to continue to build on this momentum and maybe create newer highs past the high that we made the prior week, and just for this long-term move to continue for at least some more time. Okay, so the next market we're going to be looking at is the Euro futures market. Now this market is starting to show more and more signs of going sideways rather than trending in one direction. We talked in the past about how we basically had this bearish head and shoulders kind of get nullified, and the market sort of breaking to the downside but then failing to build on any kind of momentum as you would have expected at the break of the bearish head and shoulders pattern. The market sort of reversed straight away, made its mark above the neckline of the head and shoulders, pulled back, held a support over here, continued its way up. And although we had a couple of really strong daily candlesticks closing very strongly as well, we did indicate that this is not the most interesting of locations to be looking for a lot of buying to come into the market. For one, we're very close to the high here, and secondly, we're also kind of straddled at this very important and significant support and resistance level. We have the left shoulder of the head and shoulders pattern, the base of the head, and the right shoulder sort of just lining up at this level, and we did suspect that price would probably have a hard time breaking past this level, and that's exactly what we've seen happen here. Despite the fact that this candlestick closed very strongly, the market really hasn't been very strong from the bullish perspective at all at this level. We saw the price sort of pull back initially. We tried to retest this level once again. It held as resistance, and this week it was really just an extended bearish run for the market as the sellers are trying to push price away from this major resistance level over here. Taking a quick glance at the lower time frame, you can see that the market has really just been very bearish this entire week. We opened with a gap on the market, and interestingly, we haven't filled this gap as yet. As you can see, the market opened. We did not see a bullish candlestick kind of pushing through and closing this gap at all, and price has just been bearish right after that point. We did see a couple of pullbacks to this level as the market maybe tried to close this gap, but the bearish pressure was just too strong at the long-term support and resistance level that we discussed on the daily, and prices continue to trickle down. Now, given the fact that we're straddled at this important support level here, it's not a long-term level, but it's still a decent short-term support level, and the fact that we haven't really closed this gap makes us really suspect that this bearish momentum that we've seen built in the prior week here is going to sustain itself for long. We may actually see price kind of bounce off of this area, and the fact that in fact we already have a bounce off this level, and if we can just sustain this bounce and price can continue to trickle higher, we could well be pushing to close this gap, number one, and possibly just continue to be sideways as the mood of this market suggests for now. So just switching back to the daily quickly, we can once again see that even though the market has been very strongly uptrending here, the recent trends have really been very choppy. At first we didn't see the head and shoulders pattern really play out the way it should have, and then we're just seeing price kind of consolidate around the 1.17, 1.18 and 1.19 levels, and really be very indecisive. It wouldn't really be a surprise to see price sort of try and erase the bearish momentum that we've seen both this week and just continue to be sideways, filling the gap that we have from the prior week, as well as sort of just reacting to minor and major support resistance levels in a sideways market. Okay, so now we look at the gold futures market, which to us was one of the most interesting markets to follow the prior week. And if you look at the daily chart here, it's really obvious why that was so. So for this market, in the video that we did last week, we did talk about how this market is kind of straddled between a very major resistance level over here, and of course the 1300 round number, and towards the downside, it's kind of straddled with the support level over here. We have quite a few bar lows, candlestick lows kind of line up here, and that essentially marked the floor for the range, and this level kind of marked the resistance level or the ceiling for the range bound price action that we were seeing this market develop. And even though we were initially seeing price kind of trickle higher, we indicated that it would be a lot harder for price to test the 1300 round number and the major key resistance level over here, and that should be a little bit more easier for price to sort of just go towards the downside here and test the lows in here and possibly levels lower. And we did kind of see the foundations being laid for this the week prior to the last one, and this last week, of course, we just saw price continue lower. We had a very strong daily close at this level, and the next couple of candlesticks really just pushed past this level and just continued on with the bearish momentum that we saw sort of develop the week prior. Notably, we don't really see a lot of hindrance for price here until, of course, this extremely important low. That's quite a distance away for now, and really just looking at the momentum that we've seen this market display in the past, we're not exactly confident that the move down here to this level is going to be an extremely smooth one. So, for example, we can't really rule out the idea that the market may try to retest this level the following week and just see if it holds as resistance now and then continue its way down. Or maybe we could just see the market once again start to consolidate a lot more as it nears this level. So we think a lot really will depend on how this week unfolds. We may see price kind of just continue trickling down, or we could see the market sort of pull back and test this level, this former support level, as resistance. So finally, we look at the 10-year Treasury Note futures market. Like a lot of other markets that we discussed in this video, this was also one of those markets that opened with a gap, this time to the downside. So essentially, price opened sort of at the support level that was established the week prior, and straight away we had bulls coming into the market to close in the gap, and price really just continued going up after that, only to rebound at the 124.50 level to close the week sort of on a neutral note. Now notice and recall that this is also the level, the 124.50 level is the same level that price has been oscillating around in the past when it was running sideways. This is also the level that basically price held at as resistance when we had the Friday fireworks relating to the American political news event. And this is also the level that price has held as resistance this week as well. So this really continues to be a magnet for price, even though we a couple of weeks ago we saw price sort of pull sharply away from this level, and we were talking about how this may just indicate that the market is sort of broken to the downside. We may actually see the market develop a sustained downtrend, but really that effort really didn't amount to much at all, as the last 2 weeks price is really just pulling back to the 124.50 level again, which restores our initial perception of this market that this just continues to be an indecisive market, and a market that's just running sideways, oscillating around the 124.50 level. And that theme sort of may just continue going into the following week and weeks to come. We could continue to see a lot of choppy movement as price tries to break past the lows here that we've established in the past, long-term and short-term, as well as the 124.50 key horizontal support and resistance level that just continues to be sort of like the midpoint of range that is narrowing and broadening as time goes by.